Good morning, everyone. I am the President and CEO of MSI Action Group. I am really excited to share this information with you today. We are a coaching and consulting company, but one of the things that we do a lot of is helping businesses find the funding they need to grow their business. I see there's lots of people online this morning, so that's awesome. I hope that what we're going to share with you today is going to be invaluable to you as you build your business forward. So a lot of people we talk to when we're talking about funding start to panic. They start to break out in a sweat when they talk about money and money requirements to grow their business. And a lot of it is the fear of the unknown. They don't know what to expect. They don't know how to get the money they're looking for. 15 years ago, you could have gone into a bank potentially and just said, I need some money to do this project and I need this much money. And the banks would look at how good your relationship is with the bank, and they may often just fund based on that. Now the banks expect a lot more. The funding groups expect a lot more. They expect you to be a lot more prepared as a business owner and to have your ducks in a row. So we're going to talk today about what is required and how to prepare yourself so you can get funding successfully. So we're going to talk about the different funding options, what you need for information to be prepared before you go in for the funding, how to proceed with different funding options, and the next steps that you might need to take. So when you think of funding, what do you think, where do you think you need to start? Oh, I see some people say planning, other people say looking at all the options. You're all correct. But one of the main things to start the process is deciding what it is you are trying to do. If you cannot describe what you're trying to do and how much money you think you need, you're going to have difficulty getting funding from any funding source. So you need to figure out what it is you are trying to do and what you need the money for. Does that make sense to everyone? Excellent. I'm going to play a little snippet here from the BDC. It just gives you an understanding at a high level of what the banks are looking for when they're looking at funding your business.
As an entrepreneur, you want your company to prosper and grow. So you will likely need to find financing for your business. But the idea of meeting with a bank might make you nervous. Understanding how banks think will help you feel more confident and improve your chances of getting a loan. Bankers are business people too. They need to assess whether your project is an acceptable risk for them, and if you will be able to repay your loan. Their risk evaluation will not only determine whether you can get a loan, but also what the interest rate and conditions will be. You should have a detailed business plan because it is your job to make it easy for the bank to lend you money. It should present your business opportunity, backed up with statistics, market studies, and reports. It should also introduce your team and clearly outline your plans for the future while avoiding jargon or too many technical details. Overall, your business plan should address the factors they will be evaluating. Before meeting with the bank, be sure to check your personal and business credit scores. Ensure your comments reflect what's recorded there, and have the basic documentation you'll need to apply, such as your financial statements. Show them you're willing to put your own money into your business. This shows your commitment, financial stability, and willingness to share risk with the bank. So, what exactly do banks look for? Well, they will evaluate your project itself. Will it contribute to the profitable growth of your company in the years to come? They will also look at the ability of your business to repay a loan by analyzing the following indicators: the financial strength of your business, including the cash flow it generates, and the state of your personal finances. Assets. Do you have assets to secure the loan, meaning assets the bank can seize and use to repay itself in the case of default? Your management credibility, including background, past experience, education, and the professional training of you and your management team. And finally, they'll carefully analyze your industry, the economy, and the competition. Basically, banks are looking to reduce the risk of lending your business some money. The better you present yourself, and the more solid your business plan is, the better your chances of getting your loan approved, and you getting the money you need to grow your business and succeed.
That seems simple enough. So here are the factors they talk about a little bit in that video clip, and we're going to dig into in a little bit more detail. There are 3 things that are fundamental to successfully getting funding for your organization. One is complete transparency. Regardless of what history you have, whether it's history on your credit, history legally, history of the government, whatever it is, you need to be completely transparent so you can either inform the funding organization ahead of time or mitigate the risks or show contingencies that you've put into place to resolve those issues. You need to be fully prepared. So as the video said, you need to have a business plan. You need to know what you're looking for. You need to be prepared. You need to have financials up to date. All sorts of things come into play that you need to make sure you have ready. And you need to make sure you have the right help. So you need to make sure you have an accountant that you can rely on. You know the books are done properly. You have advisors that can help you. And we'll talk a little bit about that later because we can also help businesses and like yourselves take things forward. There are many types of funding. We're going to go through each one of them in a little more detail after I show this slide. There's the banks like they were talking about in the video. There's the BDC who actually did the video. There's quasi-government banks. There are private lenders, investors. There's government and private grants programs out there. There's the Canadian Alberta Job Training Grant or the Canadian Provincial Job Training Grants. There's one for each province and territory, and there's lots of alternative funding. So we're going to go through a little bit in more detail on all of these. So loans versus grants. So loans means you have an interest rate and a repayment structure and terms of repayment that you have to abide by. Just like having a mortgage on your house. Same idea. Grants, for the most part, are not repaid, but must be used for the purpose that they were provided for. And normally there's a reporting and accountability structure. Now, if you violate what the grant was used for, they do have caveats in there and potentially could withdraw or pull back the funding from you. And then there's investors. Investors use a combination of loans, percentage returns on their investment, percentage of equity, and repayment structures for set future time. You need to know what you're doing if you're going to go into the private lender and private investor arena. Especially in this day and age when there are so many people out there that are trying to spoof other people's identity and are acting as if they are someone who they're not, you need to make sure that you are prepared for that and know what to do. So here's a list. This is a starting list of what you need if you're going to go for funding. If your business is greater than 2 years, you need 2 years worth of year-end financials. If it's less than 2 years, you need as much financial information as you can provide. So if it's a brand new company, it's any financial information you can provide up to the date of the meeting, or any closed year-end financials that you can provide to date. You want to have a business plan that is created that is forward-reaching at least 5 to 10 years into the future. And it includes a fund usage or a fund request section and a 3 to 5 years worth of financial projections. including a fund repayment plan. So the financial projections need to show that you take into account the funds you're requesting and you have the capacity to repay it. If you don't have a detailed business plan, you can get them created. My team does them. There's lots of people out there that do them. Make sure that you're not paying excessively for a business plan. We have found there are companies out there that'll charge you $35,000 to $50,000 for a business plan, and you should be able to get a business plan for anywhere between $3,000 and $5,000, written by people that know what they're doing. You need to know your credit score, both yours and your partner's, and the credit scores for your business. How well is your business doing, and how is it seen in the eyes of the financial institutions? You can pull your credit score and the credit score for your company and all your partners. If you have partners in your business, you need to know the credit reports for all your partners. You can pull your own credit reports without impacting your credit score. And you want to look those credit reports over, looking for things that should be off those credit reports that are no longer valid. Look for things on those credit reports that are not yours. We have come across numerous credit scores over the past little bit where people have things on their credit reports that aren't even theirs. We know of people that have had credit cards added to their credit history that had nothing to do with them. They had never banked at that bank. They'd never had the credit cards at those banks. And we've had occasions where people have had loans attached to them. We've had people with criminal records or criminal issues that have attached that have had their credit history attached to the wrong person. You need to look over your credit score and credit report and make sure that everything on there is yours and it's up to date. You want to have your notice of assessments ready, both your company ones, which are your T2 Corp, and your personal ones. If the company is older than 2 years, you need at least 2 years worth of information. You need to make sure you're also up to date with CRA, and you don't have anything outstanding with CRA other than normal transactions going forward. So no taxes outstanding, no GST reporting outstanding, no payroll outstanding. Everything's up to date other than day-to-day, year-to-date transactions. You want to have current year-to-date financials. So if you're in the middle of a business year, you may need to produce year-to-date financials, receivable information, payable information. You may have to show what projects you are projecting to come in the door, what signed contracts you have. You may need to come up with bank statements for the company and anything else that might be applicable to your situation. You may need to produce net worth statements. So net worth statements for the owners, and in some cases it may be for the spouses as well, if the assets are shared. And it's for all the owners in the company that are majority shareholders. So anyone, I would say, that's over 20% in a company, but the bank or the funding organization could ask for net worth statements from all the owners in the organization. You want to make sure that it's a real business entity, so not a sole proprietorship or self-employment. There are some cases where those are okay, but you also, as a business owner, want to limit your exposure and your liability to your personal wealth. So you're better off to have a partnership or a corporation or an LLP or one of the main business entities that take the business away from your personal assets. So if someone came after the company, they don't come after your personal net worth. There may be other information they ask for as well. And in a lot of cases, they may ask for personal T4s if you are working for someone else at the same time as running your business, or T5s either for other businesses that you work in or for your business. So if you have all those prepared ahead of time, you're ahead of the game when you talk to any funding organization. What a lot of businesses or what a lot of funding organizations will look at as they assess all the information you give them is whether you can carry the debt, whether you have enough equity and enough revenue coming through the company to service the debt. So they look at one of the ratios they look at is called a debt to equity ratio. So is the total debt less than the total equity that is in the company, or is it close, or is it something that you can handle given the situation? What they typically look for is a number as close to 1 as possible or less. The lower, the better. So let's talk a little bit about the different types of funding. So the banks provide loans based on your credit history, your net worth, and your financial statements. They look at whether you are a good risk to the bank, and do you have the ability to repay. So the better your relationship with your bank advisor, your small business advisor, your commercial banking advisor, your corporate banking advisor, the better relationship you have with them, the better. If you are looking to expand and your business is getting into the revenues around $1 million, $2 million, or you're getting into bigger loans, you're going to be moved from the small business banking into the commercial banking center. The commercial banking centers have a much bigger flexibility on what kind of loans they can provide and who they can provide them to. There's a government grant and funding program, oops, didn't mean to switch that, run by the banks called the Canadian Small Business Financing Program, or Financing Loan. The CFBFP, or CFSBL, as it's sometimes called too, is a special program between the government and the banks that allows you to get funding for new projects. And it's for some businesses that are in startup or that are smaller, that are trying to grow, this is a great way to get a smaller, lower interest loan. But it can fund equipment, it can fund a business, property, it can fund all sorts of different things. So it's an option that's there, and you want to do it through a major bank and with someone that knows what they're doing. The banks also provide, as everyone should know, operating lines or lines of credit, credit cards. You can often get credit cards assigned to that are associated with lines of credit. They're called credit card biz lines. And there's different types of banks. There's the major banks that everyone knows: TD, Royal Bank, Scotiabank, those CIBC. There's credit unions. There's quasi-government banks like ATB, Community Futures. There's an agricultural specific bank called AFSC, and there's obviously the BDC as well. The BDC is a special bank that's completely dedicated to business owners. And it's what we call a quasi-government bank. It has a mandate from the government to loan to business owners. And there's different types of loans from the BDC. And there's different types of loans based on the type of business you have, whether you're female, whether you're male, whether you're Indigenous owners, startup, whether you're buying a business, whether you're a technical business, all sorts of different avenues. But they base the loans based on your credit history, your personal net worth, your year-end financials, your business plan, and what you're trying to do. So they look at the whole picture. There's a quick loan option with the BDC called the BDC Virtual Business Center, which if your business is over 2 years old, you can, based on your year-end financials and your credit history, apply for a $100,000 virtual quick loan, which is paid back over a period of time. And the first 6 months of those loans are typically interest only, and then you start paying for the principal back as well. There's a small business loan section that works up to $250,000, possibly up to $500,000, which are low interest and flexible terms. And there's a larger loan center that's for startup or restructuring projects. They also do things like inventory funding, but they have a different mandate than the banks. So private lenders and private investors, I'm going to talk about both at the same time, are private individuals or private groups that provide loans based on your credit history, your personal net worth, what you're trying to do, and your projects that you're trying to do. Typically, private lenders will ask for a percentage return on their money. Tends to be a little bit higher than what you would get through the banks. Or they ask for a percentage equity in your business. They all ask for a payback structure. And their lenders are often trust groups or groups of lenders working together. Since there are so many scams and so many people's identity being hacked and being spoofed, if you're going to use a private lender or a private investor, you must verify their identity. And what we do when we approach private lenders or private investors, especially ones we've never worked with before, we will ask them for a copy of their incorporation documents, a copy of their government issued ID, and we will request a video call so we can actually see the person face to face and verify their identity according to their government ID, as well as ask them specific questions about themselves and the company to try to verify they are who they say they are. If they refuse to do that, chances are they're not who they say they are. So investors are very similar to lenders. The main difference is they may potentially do a different return on their money, a different percentage than lenders. They may be much more custom than a lending organization, and they may or may not want equity in your business depending on what they're after. There are angel investors and individuals, but the same caution needs to be used in this area. You need to verify their identity. Unless it's an investor you've worked with before, you need to make sure that they are who they say they are. And if they're asking you for money up front to issue money to you, that is not standard practice. If they have an admin fee they want to charge you, most investors and most lenders will take the admin fee off of the funds that they source to you when the funds are released. Then there's grants and tax credits and subsidies. There are thousands of grants out there between government, foundations, associations, private investment groups that want to do grants, all sorts of different types of grants. The grants are focused on different areas, and depending on what your business needs, you're going to look in different types of grants. So there's grants based on industry. There are grants that are based on the size of business, whether you're a startup or not. There's grants for women. There are grants for hiring employees. Specifically, there's grants for hiring immigrants or hiring Aboriginal people. There are grants for Indigenous groups specifically, or special needs people. There's digital grants. There's all sorts of different types of grants. And the success with the grant process is being prepared, filling out your application properly, and providing them the information that justifies why you should be chosen in the grant process. And most grants and tax credits and subsidies require you to put money in the game or matching funds in the game. It may not be exactly 50-50. It could be 10%, it could be 25%, it could be 50%, but you need to understand they want you to put skin in the game. And most grants require you to report in on a regular basis and show that the money that they gave you is being used where it was meant to be used. One of the special grants out there is for employers to train their employees. So this grant, which is available in every province, I'm specifically showing the Alberta one here, but it's available in every province and every territory, is designed for employers to increase the skills and training of their team. So the requirements of this grant is that you must be training employees, either existing employees or people you plan on employing. The employees that you are going to train must be Canadian citizens, permanent residents, or fall into the special category of special refugee status. The government will cover 2/3 of the training cost, and the 2/3 repayment is now at the end of the training. They used to do a 1/3 at the beginning and a 1/3 at the end. Now they're doing 2/3 of the repayment at the end of the training. They will cover up to $10,000 per employee per year, so you can have multiple sessions of training that makes up the $10,000. And that's the government portion. So the training itself is actually $15,000, $10,000 covered by the employee, or sorry, by the government, $5,000 by the employer. You can train up to 30 employees per company per year, and it must be completed within a 52-week cycle. It must contain 24 hours of training, 21 hours in Alberta as of the summer of 2016. Every province has slightly different modifications on this process and the way it happens, but it's basically all the same in each province. The training can be workshops, one-on-one, team training, strategic planning, but it must be provided by a third-party training organization, such as my group. We go into a lot of companies and do job training grants. There can be no owners or board of directors, people involved in the training program that are applied for the grant. They can participate in the training, but they cannot be submitted as part of the job training grant. Immediate families of the owners means their spouses, their children cannot be part of the job training grant. And they must be a business entity, a known business entity. There are some new exemptions to that if the sole proprietors have employees and they can prove that they're paying the employees on salary. Oh, there's a question. Yes, there are groups like ours that will help you with the job training grant applications if you choose to do that, and we would go over the requirements and make sure that what you're trying to train them on is grantable under that, or at least it looks like it's grantable, and help you with the process. So there's other alternative funding as well. You can do lease to owns, you can do factoring of receivables. So if you have big projects that have a long term before they come in, you can actually go to companies that will factor against those receivables so that you can increase your cash flow. There's asset-based lending, so if you have a big asset base in your company, maybe you have lots of machinery, you can lend against that asset base and get some funds, some cash flow funds to run your operation. There are companies like On Deck, Capital Link, Roynat, Innovia Capital. There's all sorts of them that can help you with bridge funding or big project funding that stands out from the normal funding avenues. And there are companies out there that will help you with receivable and payable management. So they work alongside your company every day and all the time as your receivable and payable management group for the company. But they free up cash flow so that you can run the operation. So I ask you, what would you like funding for? Would you like it for a building? For training for your team? To increase the amount of team members you have? For marketing and social media? Websites? Is it for growth? Maybe you're doing some big projects. Is it for equipment? What is it for? Oh, there's a question. Question is, can you use it to build up inventory? Depending on the type of inventory you need, there is possibilities of getting funds to help with inventory. It just depends on what the inventory is and what kind of valuation people could have on that inventory. Okay, so next steps. So if you need to review your business, my team always offers business assessments to business owners that are trying to prepare for growth. If you need that, just reach out to me and we will gladly set you up with a business assessment. If you need to make sure you have all the information ready to go, as in the list that I showed you earlier, that's important to go through that and make sure that you have everything prepared ahead of time. If you show that you are prepared and you're running your business cleanly and well, that just presents you in a much better light with the business owner, with the banks or the funding groups. You're basically going for an interview with a funding organization. They're trying to decide whether they want you in their wheelhouse, and if you are the right type of business that they want to associate with, and can they trust you. They want make sure you build a real business plan and 5 years of projections. The minimum is 3. We recommend 5 because a lot of businesses, if they can go 5 years out, show that they're doing a lot more planning and a lot more forecasting in their organization. You need to review all the options and pick the ones that you want to pursue. I would recommend that you pick the ones that are safest first, which are the banks, the BDC, and the grants, and only venture into the private investors or the private lenders when you have support from other groups and you have confidence in what you are doing. And obviously, what's also very important is that you determine the amount that you are looking for. You need to make sure that you know what you're looking for and what the funds will be used for. So that's the end of the presentation. I'd like to thank you for your time today. I'm opening the floor now for questions. Let me just see what people ask. Okay, question. How long does it take to get funding? Oh, that's a good question. So the length of time it takes to get funding is dependent on the types of funding you're going for. It also is dependent on the complexity of the amount that you're going for and how well prepared you are when you go in to meet with them. The larger the amount of money you need, the longer it's going to take. If you are going for grants, grants can take anywhere from 4 months to 18 months to get approved. Job training grants are 30 days to be approved, and then obviously the return amount on the turnaround on the repayment is at the end of the training. Private lenders and private investors, the turnaround time varies greatly, but they're all dependent on how well prepared you are and how well prepared you are to provide the information that is requested and how quickly you can provide the information that's requested. Let's see what other question we have here. I think that's it. So I'd like to thank everyone today for your time. I hope that the information that we provided will be beneficial to you in the future. If you want to reach out to us, the information is on the screen, and we look forward to helping you in the future. Thank you.